Someone smart said it right, it's the golden rule. Multiple income streams, that's what keeps you cool. The trading game is best learned when you get in the ring. Every trade's a battle and preparation's the key to everything. To everything. So welcome to JC's world, where the futures get fun. The truth about prop firms under the morning sun. Join me live, let's trade the NASDAQ ticker NQ. Break down the market moves, me and you. I'll share my strategy, the wins and all the pain. Unfiltered, real time, through the sun and through the rain. Whether you're a pro or just starting out, there's a spot for you. Honest takes live action and prop firm drama too. So welcome to JC's world, where the futures get fun. The truth about prop firms under the morning sun. Join me live, let's trade the NASDAQ ticker NQ. Break down the market moves, me and you. Daily live streams, future strategy on fire. Prop firm updates, taking you higher and higher and higher. Community insights, that's the final key. Learning, growing, leveling up for all of us to see. So come on in and let's get it done. It's not financial advice, but a journey for everyone. Real trader talk, yeah, that's the real one. So welcome to JC's world.
Test, test, test. Good morning. Happy Friday, everybody. Today's going to be another wild, wild west day. Good morning. Good morning to everyone. Happy Friday. Let's do this. Jackson Hole, Mr. Powell speaking today, his last keynote address. Let's take a look at the news for today. So, Powell, his last stand, last keynote address, or most likely his last keynote address today. You got speakers. These are Arizona time. You got speakers at 9 a.m., speakers at 10 a.m. Obviously, Mr. Powell, the big one is at 10 a.m. today. Pretty much all Fed info going on today. Fed met all week at Jackson Hole. So today is pretty much the end of that. And Mr. Powell gives us his keynote address, most likely his last keynote address today. So a lot of volatility today. Been volatile the whole week. A lot of news going on this week. So today should be no different. Size down. Patience. I'll try to get a trade in before 10 a.m. Then after that, I'm probably going to be hands off while Mr. Powell speaks. Although the volatility will be insanely addicting, luring you into trades, a lot of traps during these news events. All right, so what am I looking at? I don't know what I'm looking at. So let's take a look at last night. Here's the open. My trade's not showing. One tower always seems to reset trades. Here we go. So last night we were consolidating in this area for a while. Then you had a sharp drop, about 200 points down. That was around 1, 2 a.m., 3 a.m. Now we're in this little consolidation area. But again, today there's going to be insane volatility leading into Powell's speech. So it's going to be a P for patience day. We'll have to see if we get any direction. Otherwise, it's going to be chop up and down until pretty much half an hour into the speech. So let's see how it goes. Good morning, Randuran. Good morning. Good morning to everybody. Welcome to the stream. Happy Friday. Today, not trading any sim-funded accounts. Today, I'm off in terms of trading sim-funded. Volatility, not risking it. Mike Milan, good morning. But we will be copy trading a few evals today. Not going to go crazy. If I get caught in some red too early in the game, then I'm out. Today there will be volatility. So this is the calm before the storm. Nico, morning. Possible strong update. It all depends on what Mr. Powell says in terms of interest rates. It's his last keynote address. Where inflation was, there were leaks that inflation started to creep up again, even after we had a good report last time. So if he hints that inflation is creeping up again, then how will that affect interest rates going down, which is what Trump has been pressuring him to do. So it'll be an interesting keynote address. I may even hop on YouTube and play it live here for a little bit. I'm not going to stay on too long. Today's Friday. I don't want to get drawn into the market today. Honestly, win, lose, or draw, I want to get in and get out today within the first hour or so. if I even take a trade within the first hour. If I can't find the trade before Powell, then I got to wait for the speech, and then it gets a little crazy. Good morning, HR, Nico, everyone. Good morning, Mike Milan, Randaran. Appreciate you all tuning in. Get ready, buckle up, boys. It's gonna be a wild, wild west today. Today is not the day to size up. Today's not the day to try to recover all your losses if you're in the red for the week. Today's the day to be patient, hop on a trade. If you're not reading the market, you're not in sync with it, walk out, because the market will draw you back in. There's going to be some wild swings, and this is when you can potentially blow account. So careful with tilt today. I'm watching my tilt today. I'm making it. I already made a decision. If it gets nasty, I get caught up in some nasty red too early, walk out. I'll take the red day. Good morning, Lemonhead. But today I'm not expecting an easy day to trade by any means. Good morning to everyone. For anybody new, I live stream from Arizona, so my times are 3 hours behind New York Eastern. Let's see what direction. I don't anticipate direction being determined before the Powell speech. I think we're going to have swings up and down, and then probably a half hour or an hour after Powell speaks. That's when we'll see direction, which hopefully, or not hopefully, my goal is to be out way before direction is established. So I'm technically trying to trade the chop today, not staying on too long. It's Friday. I got a lot of things going on this weekend, so hoping to hop on, hop off, and get out. Win, lose, or draw. SATR trader, or SAT4 trader, or SA trader. There we go. It took me a couple times to break down your username. Good morning to everybody. I'll be right back. All right. I'm back. Thanks, Mike Milan. Thank you, Caesar. Please yell at me when you guys see me speaking and the mic's not on. It should be back on now. You double check. Yep. All right. So going back to the news, I talked about how this week there's been rumors already being released that inflation is creeping back up. So Fed Collins is, I guess, speaking right now, or about to speak as well. And there's already been hints. I don't rule out a larger and more persistent impact of tariffs on inflation. We cannot wait for all the uncertainty to be behind us. So this is, again, going back to what Powell or the Fed may announce today, that inflation is creeping back up, which will bring up the question, if Trump is pressuring the Fed or Powell to drop interest rates with inflation creeping back up, I would assume he's going to say, nope, not happening. Inflation is creeping back up, and these two news drops are kind of hinting that that's the direction of what Powell's going to say today. I don't rule out a larger and more persistent impact of tariffs on inflation. And that's what Powell has been saying all along. You keep to Trump, you keep telling us to drop rates, you keep fooling around with tariffs, and we don't know how tariffs is going to affect inflation long term. So it sounds like inflation is creeping up again now that some of the tariffs are in play, and I think the only one that's not in play is China. Although Trump has bragged about tariffs on China, so far he's extended the pause twice. So he's still very reluctant, meaning Trump, to fully put China on tariffs. Although he speaks a lot of hard talk on that, it hasn't happened yet. He's still reluctant to place those firm tariffs on China. 2 pauses on China tariffs already. So we'll see how it all plays out. Again, I expect volatility today. Probably no direction until Powell speaks, but it's the calm before the storm. Look how calm it is right now. Nico, I'm taking a long stop below that last larger swing low. Yeah. King Caesar, good morning. Good morning, everyone. Size down, boys. Today's going to be volatile. Today's not the day to be the hero. All right, casino opens in 5 minutes. Powell speaks at 10. Which one is it? One of those Fed speakers is speaking right now. Collins. And again, I think what we're going to hear from Powell is inflation is creeping back up with the uncertainty of tariffs long term. Nico, stop right below your yellow box. Nice. Nico, so I asked you yesterday, I wasn't sure. You trade futures though, right? You do trade NQ. I wasn't sure if you responded, no, you don't trade NQ. Christopher, good morning. Good morning, brother. Good morning to everybody. Happy Friday. Hope you guys are having a great week. Today, like I said, should be win, lose, or draw. I don't plan to trade for longer than an hour. Of course, I always say that, and then I get drawn in. But I think today will be P for patience. Timothy, I can realistically see NQ break below 23,000 today and ES below 63.50. Let's see how things manifest. Well, today is going to be based on Powell news, right? All the hype, all the volatility today comes down to today's keynote address and see how he... okay, trade US Tech 100 on CFDs. Gotcha. Timothy, there is nothing that Powell can realistically say that can be bullish for the markets. Right, especially with what has been hinted that inflation is creeping back up. So, but just because you have negative news doesn't necessarily mean the market goes down. We've seen positive news and the market drops. Right? So we could have had those drops earlier in the week as already playing out the news, and now we're seeing a pump on that. We'll see. All right, 3 minutes. Let's see how crazy it gets. Powell speaks at 10 a.m. See if we can, I'll try to capture a trade before that. If not, then today may be a no trade day for me. I got to get out of here early and not looking to push my luck. So good morning to everyone. Happy Friday. Size down. Should be pretty volatile today. Don't go too crazy. If you're into red, take the loss. Don't try to make it up in one trade. If you're into green, careful with giving it all back up. All right, casino opens in 2 minutes. I hope to get out of here pretty early. Gonna go for a hike with the fam and start the weekend. So let's see if we can get a trade in and get out. All right, casino. Casino opens in 1 minute. Be prepared. Should be the wild, wild west today. Timothy, Trump will come out later to try to clean things up. I could see that. I think today is going to be very interesting in terms of inflation. Owl. All right, here we go. 2 seconds and market's open. Casino is open. Let's go. All right, going to try to capture this little short all the way down to that bottom of the range. And I'm done. All right, caught it. All right, guys. I said I'm going to do one trade, 200 SMA, the bottom of that range. I don't care what happens after that. Caught the trade, and that is it. Basically, that was the 200 SMA rejection. You had all your moving averages here providing resistance. And let's see how far it goes. Now we wait for, or I'm going to wait for Powell's speech, but technically that's my trade. Lemonhead, right on, JC, waving at you from Alma School and the 60 here in Mesa for work meetings. Oh, Lemonhead. If you're in town, and hey, if you're up to it, let me know later during the weekend. Grab some quick coffee or something, or meet up, buddy. If you're in town, if you got a quick busy week, don't worry about it. Sure, there'll be other times. All right, guys, I took the trade. That's basically was playing the range. I was looking for what would happen on the pop up. They did not push out, so took the short on the rejection of the 200 SMA right to the bottom of that range. I wasn't interested in any more movements after that. See profit, take profit, and we're up about 680 bucks across my accounts, each one. I did not trade sim funded today, but I think that's it. I think that's my trade for the day, right in the open. And I'll wait for Powell now. Unless I see something juicy, I'm going to wait for Powell's speech and either take another trade or call it a day. All right, here we go. So the initial move, remember I said today's going to be back and forth day. Don't overstay your welcome on these plays. What I was watching for was the break above overnight high. Once we wicked out, that's what triggered my entry. In other words, we weren't going to go and make the move to the upside to break out. It was going to be a move to the downside, but they did exactly what chop is supposed to do. They flushed it and they brought it right back into range. So let's see if they're going to fail at this range and potentially bring it right back down. But that was a nice 200 SMA rejection to the bottom of that range. Quick. was quick. I was less than 2 seconds and I got my trade for the day. It's, again, I didn't trade, I'm not trading sim funded accounts today, but I am copy trading on Tradesyncer across several other accounts. All right, let's let the chop play out and see if we get any directional move before 10 a.m. I highly doubt it. I think it's going to be chopped within that range for a while. Trapping and getting hopes up. But like I said, I wanted to come in and take one trade and walk out in the green based on the volatility, the chop. You're not really trading direction right now. This is scalps. See profit, take profit. I think I'm done, boys. Not going to push it. But I will wait. I'll wait. I will wait for Powell's speech. Maybe let me get it ready and we'll play it live. See if I can find a YouTube channel that plays. That'll be live with the Fed speakers or Powell. All right, so it continues to chop just as expected. Like I said, I don't expect direction before Powell speaks. I think we're going to get some nasty reactions to the upside, to the downside. And let me see if I can get some Powell speeches. All right, I'll look for that a little bit later. All right, well, the chop continues. Like I said, this is what I expected. I don't expect direction. You're scalping this range. If you're going to trade it, I already took my trade for the day right at the open, the rejection of the 200 SMA right down to the bottom of that range. I'm nicely in the green right now across my accounts that I copy traded, and I think that's going to be a one and done day. I don't know if I'm going to push another trade with this chop. I was pretty quick right into the open. Nice little short at the rejection of the 200 SMA. Notice that we were not pushing above or testing the top of this range on that initial move on the open, and just went 200 SMA to bottom of that range. No need to get greedy, walked out. So far, one trade right at the open. All right, let's see. Now they're making their opposite move. They're trying to break out of this overnight range, testing overnight high. They already hit settlement. Let's see what happens here. But again, I don't expect direction just yet. I think it's going to be chop fest up and down, leading into Powell's speech. Good morning, Peter. Good morning. So, like I said, I wanted to make it a quick trade, getting out for a Friday, and got it. Nice little rejection of the 200 SMA right to the bottom of that channel. We're up, boys. We're up. We're green, and I think I'm done. This is going to be choppy. This is not the day to push your luck. You're playing this range probably for a while. If you're brave enough to short a top, and long a bottom, you'll make money until the range breaks, which I think is not going to happen until Powell, but we'll see. They may hint some look above and fails, look below and fails, but I would assume we're going to be in a range for some time, just chopping away. And that is longing bottom, shorting tops. But like I said, for now, hands off, got my trade in, not pushing it. Not pushing it. All right, so we had another trade here on the top. Again, this is long bottoms, short tops. And that's exactly what I did here. On the open, you saw the initial move to bust out a range. We saw that wick. That's my indicator. It's going to fail at the 200 SMA, push right back down, targeted the bottom of that range and out. Now let's see if they're going to break out. Open 15-minute opening range is in 6 minutes. See if they'll break out or come right back down. Good morning to everyone. Happy Friday. I hope you guys have kept it green. If you're in the green, careful. Today's not the day to go crazy and go cowboy on the market. The market will get you eventually with this chop back and forth. So size down. If you walk out with some green early, get out. It'll be a choppy day. Not worth it. If you're already in the red, careful. Don't try to make it all back today. Today's a day where if you capture the right wave in the right direction, you'll make a lot of money. If you capture in the wrong direction and you fail to accept you're wrong, you can lose a lot of money. King Caesar is driving. So appreciate you tuning in, brother. Good morning to all. Hard for me to text on my phone as it's acting up. Well, King Caesar, happy to see you're at least trying to tune in from your phone, brother. I appreciate the support always. All right, there's the breakout of that overnight range, and they're pushing. So they're pushing. Where are they going to push to? That pivot point at 40. So let me bring in Trading View and take a look at price action there. Here's the 5, the 15, and the 30. You look at the 30-minute, look at this pivot point. That is 340. That's a potential shorting opportunity with the liquidity zone right here at 62. So this area right here, if I were to trade again, I'd probably look at a short up there. But like I said, I'm done. Not pushing my left today. Got the trade that I wanted, one trade and one and done. My pride is okay to walk out. Wow, they're pushing. All right, so we're watching they're after previous day high, right? You have a pivot point up there at 340, which they weren't able to push last night. So 340 is the pivot point. You got a liquidity zone up there around 360. So in between 340, 360, you're right around previous day high. Potential shorting opportunity here for initial rejection. If they push through, though, that'll be interesting. And hands off, even if they get there. Let's see, hands off for me. Lemonhead heading out this afternoon. I make it down this way quite a bit, though. My daughter and granddaughter live in Mesa. We'll have to do lunch or something another time. Sounds good, man. But good to see that you're in the area, Lemonhead. Have a great, enjoy work and have a safe trip back home. All right, it's going for that pivot point. Back to Trading View. That's what I'm watching right now. This pivot point right here, that should be a juicy short. Got liquidity zone right there around 360. So between 350 and 360 if we get up there. But watching. Hands off. And looks like that pivot point wasn't touched, but taking some initial rejection here. See what happens. Are they going to bring it right back down? So there is your 15-minute opening range being established, 117 points. All right, they're going for that pivot point, previous day high. I don't see why not. They're that close. I think they're going to pop it to, again, that 350, 360 range. That's what I'm watching for. Are they going to push right through that or take a little bit of an initial rejection up there and bring it back down? Watch. King Caesar is in on that scalp. 15-minute opening range breakout play to the upside in effect right now. They gonna pop it? There they go. Or are they gonna fake out the orb breakout? Ooh. See if it's a fake out. Yep, that's typical NQ. Faking out the orb play. You've seen that over and over in the last couple of weeks, trapping the opening range breakout. He flushed them out, stops being hit right now, or decisions get out or stay in that play. If you're in a long play, late to the party on that long for the opening range breakout, you just got trapped. See if they pop it again, or they flush right back down into the range. So I use on Quantower, I use the opening range indicator. It sets my low and my high automatically. So the 15-minute opening range is a 118-point range right now. This top line is obviously the top. That's between 630 and 645, and that's what they tried to do right here is trap the breakout. Anybody who's late to the party got flushed down about 15, 20 points depending on entry. Let's see if they continue that flush or they pop it. Peter Chan, that's why I only scalp 3 to 5 on these 15-minute orb plays. Yeah, lately the orb play is not the initial move. They flush the orb players. They flush them down nasty for the last couple of days and weeks. Doesn't mean it's not going to happen. It's just not the initial move. They flush them out. Get some stops. Christopher, okay, green on the week, not a repeat of yesterday. Done. Good, Christopher. Nicely done. JC, be safe on your hike. Go to turn off and walk away. Yep. That's what you should do. Christopher, you walked out on the green. Good stuff. Happy for you. And that's when you turn it off and walk away. Like I said, I took my trade. I said before the stream, I'm only looking to take 1-2 trades max. If my first trade is green, then I'm walking it, whatever that green is, take it and run for the hills. I'm sticking to that. I'll watch the Powell statement, but my one and done trade is done, and I'm not pushing it today on a Friday. Powell, volatility, why? Just why? Why do that to myself? Sticking to the discipline and hands off. but I'll watch. It's part of the passion of trading. You love the charts, you love the price action, you love the news, and that's what I'm doing. Okay, so we going back to that pivot point, right? Let's go watch this pivot point on the 30-minute. Here we are right here. Initial touch, we took a little bit of rejection. It coincides right now with that 15-minute opening range breakout. But we were right there, and now they're looking to push up. If they do push up, I'm waiting for 370. But right now, all I'm doing is just looking at the way I would trade this and getting confirmations on as we go up, but not taking trades right now. I'll be right back, guys. And there they go. They're pushing that pivot point. Let's see again what happens at 360. 350, 360 is the zone. And they push up there, or are they going to take the initial rejection right back down? And that short is so tempting. Short is so tempting. Ooh, are they doing another fake out on that opening range breakout? All right, they're pushing. Bears are holding that area. You got pivot point, you got previous day high there. That's a juice. Normally, that's a juicy short. Like I said, I got my trade for the day. Now I'm messing with it. That's what the market does. It lures you in. It wants to suck you in to take that trade, and then it flushes you out. All right, continue to pop it. This is the this is the breakout. So you got a pivot point. You got previous day high. This would be a breakout zone. I guess is you'll take a little rejection here initially and flush some late the party bulls, flush them right back down. Let's see. All right, Powell speaks in 10 minutes. Let me see if I can get stream. All right, a little bit of indecision up there. Are they going to flush some late to the party bulls up there or continue the push up?
And people right now are sitting on their hands. What I'm hearing from lots of people is, I need to let some of this uncertainty. Now, the only exception to that are.
All right. We'll hop on the. We'll watch the Powell speech in a little bit.
Question in. The temperature's dropped since we started.
All right, let's continue to watch this. So we talked about that previous day high, that pivot point up here that they have not been able to push above. You're going to flush right back into range. Find out pretty soon. Frank, how will the news affect it? We knew that trading would be a lot easier. It all depends. It all depends on what Powell's going to say. So the hints this week, and so far, one of the Feds already came out and hinted. Sounds like inflation has been creeping back up because of the tariff news, right? Some of the tariffs have now gone into effect, and that has pushed inflation or creeping back up. So Powell was, if you remember the last Powell speech, he hinted at that. He was not going to drop interest rates to potentially have inflation creep back up until tariffs were settled. And so far, what we've heard this week were kind of hints, rumors that inflation is creeping up. So if Powell comes out and says, yeah, right now we're not going to make any changes to interest rates, tariffs have affected inflation, and that's a problem for Trump, who's asking for interest rates to be dropped. That's what we're going to hear. So we don't know how it's going to affect the market until we hear the news. My guess and what Wall Street has been hinting is we might get a big drop today based on what Powell says. So this could be the trap to the upside, and then we see a big move to the downside. All right, so there's the trap for that 15-minute open range breakout. It's the pivot point that I showed you guys, that 340, 350 area, short at the pivot point, playing out. And right back into range. Are they going to hold the top of this range to bounce it? I would think we're going to flush right through, right back to the bottom, range to range until Powell speaks with no direction yet. Yep, that was a trap for some late to the party bulls getting excited on the breakout, flushing them right back down into range, but nothing unexpected. In other words, I'm still not, until we break out of that range, then we have the directional move. The hints are, the rumor is, Powell might be saying inflation has creeped up, tariffs have affected inflation, and potentially no changes to interest rates again, which could push this market down today. Now, remember, I'm not a financial advisor. This is for entertainment purposes only. If you're just hopping on, I took my trade for the day right at the open. Shorted the failure of the 200 SMA, the top of that range. Shorted for the bottom of that range, and I'm done. Said I was only going to take 1 or 2 trades today. If the first trade is green, I walk out. Guess what? At the first trade of the day green, I'm walking out. All right, so no surprise there. We're still in a range, flush right back down. Not surprised on that move. That's typical FOMC price action till Powell starts speaking. Peter Chan, you're trading sim funded accounts? Ooh, you got cojones. I'm not trading sim funded accounts today. Jesse James, good morning. Frank Six, good morning, brother. Thank you for tuning in. Thanks for everyone tuning in. Happy Friday to all. Got your green already. Ooh, there you go. Another, there we go. Mr. Powell speaking. Here we go. Here's the volatility. All right, let's zoom out for the volatility. Big Caesar. Good stuff. You caught that. Here it goes. There's your boner candle, Mr. Powell. Mr. Powell moves the market. All right, I'm trying to see if Powell is speaking yet. Not yet. Let me see. Oh, Peter Chan. Yep. We are all trading paper accounts. Yep. All right, how high will she go? All right. Got my first rhythmic lag with the news. I just got disconnected on rhythmic. No surprise there. Why you don't trade FOMC? We'll get stuck in trades with prop firms. Holy cow, it just pushed up. We're at 500 right now. All right, keeps going. Let's see how long it takes for me to get connected again. But I just lost my rhythmic connect. Okay, now it's back. Got to zoom out to capture this volatility here. All right, I think Mr. Powell's speaking now. All right.
Layoffs, the ratio of vacancies to unemployment, and nominal wage growth.
All right, now you guys should hear it.
Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment.
There we go. So inflation is rising.
At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible.
Right.
We expect those effects to accumulate over coming months,
so inflation
with high
continues to go up.
uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem.
Yep.
A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses.
Inflation continues to be a
Measures of
problem.
longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach.
So inflation continues to
turning then to my
creep up.
second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference,
Good morning, Carlos.
and policymaker discussions
Julian.
and deliberations supported by staff analysis
Cooper. Good morning.
at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasize the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, We thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation.
All right, guys.
We concluded that the emphasis on an overly specific set of economic...
I had mentioned before, inflation continues to creep up because of the uncertainty with tariffs. Now, with inflation creeping up, unemployment rate is going down, which is a little tricky. So right now, we're having to push up. With typical FOMC, there's a move up, a move down, move up. So I expect some type of pullback on this. But like I said earlier, I got my one and done trade for the day right at the open. Got a nice little short here and walking out with some greens. So I am calling it a day, guys. Appreciate everyone tuning in. Happy Friday. Have a great weekend. If you got some green, lock it in. If you got some red, don't make it worse on yourself. Walk out. It's FOMC. It's going to be volatile. It's going to be crazy. So don't go too crazy today. So appreciate everyone tuning in. Happy Friday. Have a great weekend. That's all I got for today. Fortunately, I got my trade and no need to push this any further. Have a good one. Appreciate you all. Have a great weekend, and I'll see you guys on Monday.
Someone smart said it right, it's the golden rule. Multiple income streams, that's what keeps you cool. The trading game is best learned when you get in the ring. Every trade's a battle and preparation's the key to everything. So welcome to JC's world, where the futures get fun. Truth about prop firms under the morning sun. Join me live, let's trade the NASDAQ ticker MQ. Break down the market moves, me and you. I'll share my strategy, the wins and all the pain. Unfiltered, real time, through the sun and through the rain. Whether you're a pro or just starting out, there's a spot for you. Honest takes, live action, and prop firm drama too. So welcome to JC's world, where the futures get fun. The truth about prop firms under the morning sun. Join me live, let's trade the NASDAQ ticker MQ. Moves, me and you. Daily live streams, future strategy on fire. Prop firm updates, taking you higher and higher and higher. Community insights, that's the final key. Learning Learning, growing, leveling up for all of us to see. So come on in and let's get it done. It's not financial advice, but a journey for everyone. Real trader talk, yeah, that's the real one. So welcome to JC's world.